Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report from Monday, December 18th, 2023. Let's take a look at the chart, start with the big picture, work our way into the day itself. I could go back. We did have a sell signal a couple, 2-3 months ago below the 278.45 channel bottom that played out for a spell. But following that, several weeks later, we closed above this newly created, based on the late October low, descending 1/3 speed line, where we topped out for a week, but when we closed above it, it indicated a test of this channel resistance within 3 to 5 weeks. So we're about 5 weeks into that. I will recognize that there was a spell last week. I can go back to Tuesday of last week, where we closed below a channel bottom that set up a 1 to 2 week sell signal. The following day, that reversed back into the driver's seat with respect to bullish continuation, anticipating this 255.67 to 261.28 area once again as a realistic 1 to 2 week objective with present volatility that's all about 2 to 3 days. So we are right there right now, 255.67 to 261.28 on the daily chart. We are using the weekly numbers right now at 255.70 to 262.71 because they're a little higher in value. This is a band of resistance that as we've been mentioning, that may well contain buying through January, possibly into later Q1, and we could fall away from here in a meaningful way. And what I mean by that, I think you kind of take this in chunks or segments, if you will. I think once we test the mid 250s to low 260s, this market could rotate back into the 210s. This rising 2/3 speed line is what I would have in mind as a possible 3 to 5 week objective, say by the end of January. And that's 214.76 would be our aggressive downward pivot point secondarily. So 3 to 5 weeks, once testing 261.28, 3 to 5 weeks, 214.76 attainable. Not clearly indicated unless we close below the rising 1/3 speed line at 235.38, which I'll get to all of this in a moment. I'm just kind of breaking the market down into these sort of segments, these 3 to 5 week segments. Testing the low 260s, you might anticipate the mid 210s. Closing below the mid 210s, you should anticipate actually the lower 170s, which is, I'm trying to see if we've got that illustrated anywhere as a proper channel bottom. And, we really don't. Sorry about that, but it is nothing more than this line study coming down. As we test 261.28, once again, we can rotate off of here in a meaningful way, possibly within 2 to 3 to 5 months, back into the 170s. But I don't see that as a clear objective unless we were over the following 3 to 5 weeks or so to close below 214.76. I hope that all makes sense. Anyway, we are right in this 255.70 to 262.71 region. Once again, these are the numbers on the weekly chart, able to contain buying for the week through January and possibly into later Q1. And from here, we've got, I've got 246.78. Let me see if I've got everything shown here. I do know that I do have 246.78 somewhere. There it is. A simple blue trend line here. Can contain intraday selling pressures, and if we break 246.78, 242.87 is likely where a daily low can be placed. If we close today below 242.87, expect a test tomorrow of 235.38. 235.38 is a rising 1/3 speed line based on last week's high, able to absorb weekly selling pressures. From here, we can round back up into the 255, 261 region within a week or two of doing so. It is a 235.38 floor to 261.28 or 262.71 on the weekly chart ceiling that we could trade inside of through next week perhaps before the market tips its hand in one direction or another. If it closed above 262.71, the hand tips north. If we close below 235.38, it tips south to 214.76. So it's not going to happen today. But if over the next 3 to 5 days we do close below 235.38, good December high, we should, by within a week, 2 at the very most, fall to 214.76, where we could bottom out through January, round back up into the mid 250s, low 260s. 214.76 is a meaningful pivot point on the 3 to 5 week time horizon, as I've said. And so following a test of this low 260s, 214.76 in reach perhaps by the end of January, where we could bottom out into February and round back up into this band of resistance that is presently 255.67 to 261.21. So I think I've said it pretty well. I'll say it one more time, and then as I say, 255.70 to 262.71, able to contain longer-term buying pressure. So I'm talking to day traders, 3 to 5 day swing traders, 3 to 5 week swing traders, and even 3 to 5 month near-term investors. Because once we test this upper area, we can fall all the way back into the 170s, as I say, channel support within 3 to 5 months of testing the 255.70 to 262.71 region. Now, if we close today, Monday, above 262.71 with present volatility, we should rally to 278.45, which can in itself contain weekly buying pressures, nothing more than this former channel bottom. So we could, here's the scenario that I think is possible. If we close above 262.71, 3 to 5 day target at 278.45, we can fall off from 278.45 back to the 255.70 to 262.71, a band of channel support. And we could trade inside of this widening wedge for several weeks. But just know that if we close above 262.71, I do see that as a longer-term show of strength. And I'm trying to see if we've got that outlined anywhere. And yes, we do. This is the scenario that I think is realistic. If we close the week Friday above 262.71 by a full 1% margin, we've got that marked all week at 265.33, then I do think this could be a 3 to 5 month move, but it is anticipated 346.49. Yeah, I'm going to say 3 to 5 months I think is realistic. And of course, once again, on the way up, that 278.45 formation able to contain weekly buying pressure. So 3 to 5 day swing traders can go long with a settlement above 262.71, even a daily settlement, but I think the 1% zone is going to be important this week, especially on Friday. I just want to clarify, I don't see an official long-term buy signal unless we close the week Friday above 262.71 by that 1% margin. Then yes, anticipating 346.49 within 3 to 5 months. But during the week, closing above 362.71, we can and probably will reach 378.45, and we could top out there and trade inside of this widening zone, ever so gradually widening zone, for the next few weeks before the market would presumably continue onward and upward to this 346.49 area as a 3 to 5 month objective above 262.71. Until then, this is your sell zone. If you're long Tesla right now and looking for a place to take profits, this could be it, especially if you're a 3 to 5 week swing trader. But as I say, over the next 3 to 5 months, we could fall all the way back to channel support that is presently in the 170. So keep that in mind. If we close above 262.71, no good reason to be short Tesla as we move through the first quarter. But until then, you should question whether you should be long over that time horizon. I'm not talking to those of you who have bought Tesla and you're holding it for years to come. I'm talking to those of you who are trading the 3 to 5 week to 3 to 5 month time horizon. This is going to be a big test for the market. And as I say, once we test it within 3 to 5 weeks, we can fall back to 214.76, and within 3 to 5 months, back into the 170s. So keep that in mind. I think I'm going to round it out. Please click like, share, subscribe, and check out wickedstocks.com. I'll be back tomorrow, of course, with Tuesday's Tesla Report.